Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vase. I am continuing my efforts to bring you these shows with co-hosts. My co-host for today is not with us yet. Hopefully, he will join soon. But I wanted to go live because I do have a little bit of a time constraint. But Jacob will possibly be joining me in a little bit. Oh, he's getting set up now. Great. I just wasn't sure. Yep. But Jacob Canfield will be joining me in a bit, but we're already live. So I'm going to just go straight to screen share and we go from there. All right, guys, real quick. I will have my calendar all done by end of weekend. Pretty much my travel schedule is set pretty much for the rest of the year. And as for the workshops, I'll be in Dallas next week. That was going to be preceded by the Futurist Conference. That stuff actually is on the calendar. If you go to my calendar, you will see that I am in Canada next week for Futurist. You can just hit the drop down, go to the event website. I think I have like a 50% discount code. I should probably tweet that out again. Then I'll be in Dallas for BitBlock Boom. And then we are going to have a workshop, the options workshop. October, there's actually a couple of conferences here as well. I will be at Honey Badger. I'll also be speaking at the Black Blockchain Summit. We need to add the links. That would be right here in DC. So I'll be coming to DC as well. Leah will be there as well. All of this will be on my calendar, hopefully by end of weekend, and then we'll get October set. All right. And of course, guys, if you want to support, check out the affiliate page. TradingView, and we now have eToro. So if you want to trade, if you're a U.S. citizen, eToro is open to U.S. residents. LVL open to U.S. residents. Go ahead and click on these links if you are going to be trading as a U.S. citizen, because that's generally a problem. Ugly Old Goats newsletter and the like. All right. I'm going to jump onto the chart. Not going to say much about the monthly. Let's go to the weekly chart. When we did this episode yesterday with Socrates, I wanted to follow up on a couple of things we said. Yesterday, this candle was a lot more bullish than it is today. It's really important how these weekly candles close. And if this weekly candle closes the way it looks right now, that is not a bullish sign at all. Okay, this is a reversal candle. This is a shooting star candle, and while it's not taking place at the very high, when I go to the lower level time frames, you can see how we are getting rejected by the top of this channel. Now, the longer we stayed at the top of this channel, the more likely we are to break above the channel. But we need a clear break of the channel, which didn't happen. So I'm jumping straight to a low level time frame on this candle. So, and while the probability was slightly higher that the breakout would take place to the upside out of the symmetric triangle, you guys heard Socrates say on this show yesterday that he doesn't like symmetric triangles because they're too unpredictable and the statistics aren't there. And he's right. The probability of breaking up to the upside here is not 60-40 or 70-30 like it is with ascending triangles. Symmetric triangles are way closer to 50-50, and it's not enough to speculate on a trade. Now, the other thing we both said, or at least I said, that on a weekly scale, I would absolutely need next week's candle to trade above the current week's candle in order to take on a bullish trade from a weekly perspective, in order to be bullish fully from a weekly perspective. That can't happen till next week as well. Okay, so that's what we have to wait for. On a daily side of things, we have on the daily side of things, what we have is we have this 9. Now, again, trading is not easy. Trading is hard. The 9 candle was a big giant red candle until the end of the day, markets rallied. Now, what do I always say? In order for this 9 to not be a correction, I need a green 1 that is a non-tradable candle, followed by a green 2 breaking above the 1 and above the 9 candle. Clearly, that did not happen at any point in today's red candle. So this 9 is still in its 1 to 4 candle correction. Can this 1 to 4 candle correction take us all the way down below 9,000? Of course it can. Okay. Now, it's the opposite of what happened over here. When we started to rise, I was only anticipating a 1 to 4 candle dead cat bounce and get rejected. That was my initial expectation, right? This is a tradable bounce. You trade it to the upside, and then you watch this zone very carefully. The odds slightly favor a rejection here and more downside. But if we can break this resistance, then you're long into the next 9, which is what happened. Now we have the opposite situation. Now I am anticipating a 1 to 4 candle correction with this moving average serving as support. If this moving average can bounce the price to the upside, I become very, very bullish into the countdown phase of sequential as it goes to new swing highs above 14,000. But if we break below this moving average, and this correction is lasting longer than 4 candles, I am now a bear looking for a 9 to the downside. Nothing has changed, right? So you have to treat the market based on what it's giving you and take on probabilistic trades. And I love trading the sequential, and Socrates loves trading the parabolic SARs. And oops, I should be on a weekly scale. And on a weekly scale, if I open the parabolic SARs, you can see that Socrates said he was not going to go long until you break the parabolic SAR to the upside. And that's not till 13,600 on a weekly scale. On a daily scale, if I open up the SARs, you're still bullish. But they're rising quickly. So let's see what happens. And the SARs became bullish right here at this moving average. See, that's the difference, right? I would jump on a bullish trade earlier than him. And here is where I'm being cautious. And once we break this area, I'm bullish again. Right now, I am cautious and I am more bearish than bullish. I will be cautious again in a couple of days if the price is sitting just under 11,000 or at near 11,000. With the SARs moving up quickly, the SARs are going to be near 11,000. The moving average is near 11,000. That's the 50-period moving average. And that is acting as support. Okay? And if it breaks down all these things, then I become very, very bearish. Okay? And if we ever get back to the vicinity of 9,400, I become very bearish, right? Now, you have support here at the setup trend line. It really depends how quickly, if we get down to the setup trend line, it depends how quickly we get there. We can get there tomorrow. We could also get there at the end of August. If we get there at the end of August, it'll be a double support zone between the setup trend line and the 128-day moving average, which makes it a stronger support. Obviously, we'll be in the downtrend of parabolic SARs. All right, I'm hoping that Jacob is watching what I'm saying, because I really don't want to repeat it, because I wanted to get his take on Bitcoin. But okay, Hey, there he is. Awesome. All right, I just unmuted you, man. Let's check your mic.
Sorry, I can't hear you.
Yep. Me. I got you. How are you? Can you hear me? I hear you. Check your mic settings, bottom left.
Yep. Mic should be good. Can you hear that?
Yep, I hear you. Can you hear me?
Yep, I got you.
All right, perfect. How are you, man?
Good, man. How are you?
Good, good. We've never actually officially met before. Just spoken on Telegram a little bit, and so I'm honestly not very familiar with your work, Jacob. So
that's okay.
Tell my audience, and including myself, a little bit about you.
Yeah, so I've been trading about 15 years, not full time that entire time. I learned how to trade options basically when I was in college. It helped me pay for college. I took one of those. It wasn't around the time when there were really online educational courses. I got a binder full of CDs and DVDs with coursework and homework. So that was kind of like my first.
Do you remember the company that you took that from?
It was an individual, and I remember that it was just a ton of options strategies, but I remember I got wrecked because it never really went over risk management really well. So that's kind of been like my biggest thing. I think I doubled or tripled my account within the first like 2 or 3 months, but then I just kept doubling down. But yeah, so I'm actually a chiropractor, but retired. I retired in 2017. I ran a practice for about 10 years, but I traded for almost all that whole time. I traded mostly stocks and mostly biopharmaceutical stocks because my background is mostly in neuropathophysiciology, neurology. So I could understand a lot of the literature. So I combined a little bit of fundamental reading, a lot of the lab reports, a lot of the trials, a lot of the studies. So I'd have a good edge in knowing whether or not a drug was going to be approved or not. And so I would short or long pharmaceutical stocks based on technicals and fundamentals. So that's how I got into it. But I started.
Were you doing that with options, calls and puts, or were you buying them outright?
Both. Yep. So basically TD Ameritrade. And then, yeah, so that was most of it. But then I got into crypto in 2016. My first purchase was not actually Bitcoin. It was actually Ethereum, because I read the white paper, smart contracts. And then Bitcoin is really what took me down the rabbit hole because it was sound money, against basically I'm a libertarian just by my political views, but it really kind of resonated with me from a Austrian economics standpoint, as well as in 2008, I had a lot of money in the stocks. And at the time I was going through school and I wasn't actively trading as much as I was now. And so, just the way that the banks shut down, how you can only have $250,000 federally, insured, control over your assets, all that stuff. So, for me, it just made a lot of sense. But yeah, I got really lucky as far as when I entered crypto. I put a large chunk of capital into Ethereum, and within like 30 to 60 days, I had like tripled it. And so that was kind of like my first foray into, oh wow, this is crypto, this is awesome. So I didn't have to ride out the 2013, 2015 bear market. It was more like I was coming in October 2016, right before this, hyper explosive volatile market.
Gotcha. So you got into the space through Ethereum. What does your, I guess, crypto hodling portfolio look now from a percentage basis? Like what percent is Bitcoin
100%.
versus other crypto?
Now, I mean, I sold a lot in 2017. One of my principals and one of the traders that trained me, one of his biggest things that he's always said is, if you take profits and it's enough to change your life, then take profits. Don't let that ride. If it can change your life for the better. So I took a lot of profits on a lot of my positions. I held some, from all-time high, probably held it to $1 million, drawdown. But then once we started seeing long-term trends start breaking, like we started seeing a lot of 200 MAs breaking to the downside, a lot of, but basically trends were over in a lot of altcoins. That's when I kind of capitulated my position. Probably on the bounce in April of 2018 was when I sold a majority of most of my positions. And, to the tune of break even / maybe 20-30% drawdown on.
Is that, does that include selling Bitcoin and you went into fiat?
Yes. Yep. I sold a lot of Bitcoin. I held about 30% of it. I held it all the way down just because that's my HODL account.
Right.
Also, I wanted to avoid cap gains. So I bought some Bitcoin when it was at like 8,000 or something like that. And I was hoping that we'd at least hold that 66,000, 7,000, but I cost averaged in a lot around the 3,000, 4,000 range. And I'll be holding that for a year, but mostly I've just been hedging my positions at this point. I don't really, I have a spot portfolio and then I have a trading portfolio, but my spot portfolio, I use derivatives and futures contracts to basically hedge it when we're sitting at like key resistance levels, or it looks like we're going to have like a drawdown of some kind.
And we're talking about Bitcoin specifically now.
Bitcoin specifically. Yeah. I mostly trade Bitcoin. I have about like 10 Bitcoin on Binance that I will just kind of play around with altcoins when they look like they're, spicy or setting up for something. But mostly I'm a margin trader, and I hedge my spot positions.
Okay, cool. So back to the question that started this, on a percentage basis, like for example, my HODL position is 100% BTC. It could be 0.1 BTC. It could be, 40 million BTC. Like obviously it can't be. But the point is on a percentage basis, like I don't touch or hold anything but BTC. So on a percentage basis, is your HODL portfolio have anything other than Bitcoin in it? And if yes, approximately what percent, and why are you holding it? I'm really curious.
Yeah, that's a really good question. So 2017, I actually started on YouTube because I wanted to get on YouTube to warn people of all the scams that are out there. That was kind of like my first foray into streaming, into like making videos. But my position has always been to have at least 50% of your portfolio in Bitcoin, because it's the big dog, right? It's like if you're trading currencies, you want to have most of your position in the dollar because it's almost always the strongest currency amongst the majors. And when shit kind of hits the fan, it'll gobble up dominance, the same thing you'll see in the major currencies. But yeah, so from a HODL position, I will only buy and hold an altcoin if it's in an uptrending market. So for instance, REN was a really, really good altcoin that it's been kind of consistently holding its gains. I bought some at 500 and then I'm still holding some, but I sold a lot at like 1300 zone. And then Raven was another coin that I bought kind of low sats. And it's just a fundamental play that looks like it's setting up for like a good long-term position. But, if it hits like 300, 400, 500% return, then I'll just sell it. I have no emotional attachments to any project, but I would say at this point, 90+% is in Bitcoin.
Okay. Gotcha. Thanks for that information. Yeah, obviously I came up the same way. I mean, what for me, it was like 2014 when I was already warning people of altcoins. And though I will say that I think in the first half of 2014, I was still, somewhat open to the world of altcoins. But by the end of 2014, I was already a Bitcoin maximalist. I already realized that the rest of the stuff just makes no sense at all. But that's kind of my path to it.
There's some sense to it in the sense that our economy will eventually become a token economy. We just haven't figured out the way to really maximize that, right? Like right now we can exchange value through airline miles, restaurant gift cards, all these different things. It's basically, we have a digital economy, and what altcoins and crypto is trying to do is basically digitalize it. We're trying to put everything through a digital, ledger that we can keep track of. And so that's the way that I see it.
Yeah, no. I'm with you. I'm with you. From a technological point of view, this makes a lot of sense. But with all of the digital stuff prior to crypto, like the point of it being digital was the right way. It was for transferability. It wasn't for speculation. And this is what changed with crypto. And I think the speculation side of crypto is going to end. And sure, can we have a world where it's much easier to transfer in a decentralized way these airline miles between people? Absolutely. We will have technology to do that. But the speculative side of one guy creating it to get rich, that thing is that eventually people are not going to be dumb enough to keep buying into this nonsense.
Yeah, so I'm in agreement. I am mostly a Bitcoin maximalist myself, just because the technology is there as a store of value. It's proven itself against a lot of different attacks, and it's a nascent technology. It's super new. It's only a decade old, so it's not like we don't have a lot of information or data to go on how it's going to handle an economic recession. We're already seeing a lot of, macro political background, like a really strong macro political backdrop that's really setting Bitcoin up for exactly what it was designed to do. And I tweeted out the other day something along the lines of Bitcoin is being adopted exactly where it needs to be adopted in the countries that need it, and it'll be adopted here eventually in the time that we need it. So when we see the dollar weaken, when we see inflation really take hold, when we see us not able to pay our debts, when we see us, when we see a lot of these things start to come to fruition, well, Bitcoin is one of the best and easiest ways to move your money into a, kind of a safe harbor. Even though it's super volatile, it's still to date, 300% up, in 2019, over the last 10 years, over 1,000,000%. I mean, it's still the best, alternative hedge against recessive economies. That's the kind of way that I see it.
All right, so before we both go and look at charts, and you'll be welcome to share your screen as well if you have charts of your own you want to show my audience. Since you mentioned Twitter, our last little topic before we get into the charts is, of course, your most popular tweet ever in regards to Calvin Ayre, where you famously said the real reason why Calvin Ayre likes Bitcoin is because it's 10 years old. And I couldn't do the show without that really made me laugh when I saw that tweet. And I don't I don't really have time to follow a lot of people, so it's rare that I see other people's tweets. But that one definitely made me chuckle.
Yeah, I was just driving and I was like, oh, that's a pretty good one. I didn't expect the response quite to that level of, I think that tweet got like 12 million impressions by itself or something like that. But yeah.
Yeah, so that was pretty funny. Did you get sued over that? No, they like to sue everybody.
No, I didn't get sued. I'm in Florida. I mean, he was just here about he was about an hour. I live in Miami. He was about an hour away. We could have done a double court session. Did you, on that topic real quick, did you happen to read Peter McCormick's defense letter yet?
I did because I had to, because I myself got a letter from a scam coin known as Token Pay, where their lawyer
sent buddy, I've been warning against that for about, I don't know how long.
Oh, you don't like that one either, huh?
No.
Yeah. So their lawyer sent me a cease and desist letter, and
I read that.
What's up?
I said I remember reading that.
Yeah, and I did a whole video about it, and but before, so I had to put together what I wanted to say in regards to my verbal statement against their letter. So I definitely read over Peter McCormick's and checked with a couple of friends, and they told me, what not to do based on what Peter McCormick did. So I played mine a little more carefully. But yeah, Peter just went after him big time.
Yeah, that defense letter was incredible. Basically, what the strategy that they're doing is just putting the burden of proof back onto them, which is You know, it's like, hey, you failed to prove yourself in 2016. What makes you think you're going to prove it now? And show us and demonstrate how we actually ruined your reputation. And are you even a citizen of this country? I am, but are you? You live in Australia. Show us where your business is located here. Give us LLC paperwork. It's like, that's a very brilliant tactic and strategy. You know, it's kind of reframing and putting it back on them. And if I was an English judge and I saw some kind of tourist who had already had one libel suit thrown out, kind of coming in to sue one of my, you know, fellow Englishmen, I guess is the way I'd put it. I would probably, you know, there'd be a little bit of bias there. You know what I mean?
All right, cool. So I'm gonna quickly do a summary of what I said before you joined on my outlooks of the Bitcoin chart throughout the markets, and then I don't know what type of TA you like. I'm assuming are you more in the crypto space? Oh, by the way, do you still trade anything other than crypto these days, or is it like 100% crypto, 80% crypto?
20% options. So I have like some options on Twitter right now. Yes, I mean, I'd say 80% crypto, but when the market's kind of flat ranging, and just kind of indecisive / choppy, then I'll flip over to options. And then sometimes I'll trade Forex. Forex is fairly new to me though. I've only been trading it for like 2 years. So, you know, I'm not as much of an expert in Forex as I am other markets.
Yeah, I've never traded Forex in my life. My expertise is in specifically option spreads. I don't know if you're an option spread trader or you just use options for speculative purposes for the leverage and, you know, I guess risk optimization.
Both risk optimization and for the leverage purposes. I like to, you know, there's lots of really cool strategies that you can take with options. And I have a pretty good read on most of the markets from a fundamental standpoint. I'm a tech guy myself. I own a mobile app development company. It's been operations for like 10 years. So I'm always trying to adopt new technology. So I'll take a lot of my knowledge of new technologies and then I'll apply it to what I think the markets are going to respond to. But I'm not like a earnings guy. I don't like to play earnings announcements. I'm mostly technical. But I will play like, you know, strong trending.
Gotcha. So your option trades in traditional markets, they're still reliant on you getting the direction correct.
Correct. Yeah.
Got it. Okay. Yeah. That's what I was just curious about.
So from a TA perspective, I mostly use Fibonacci, moving averages, RSI, and then I'll look at like the stochastic indicator. And a few other tools, TD sequential to kind of confirm things. It's mostly I look for confluence and then price action, right? So I'll look at weekly, monthly, stuff like that.
And what's your view on volume? I mean, I'm not a huge fan of volume, but some people swear by it. There's nothing wrong with that. It's just not my trading style. How do you factor volume into the equation?
I always look at, so it depends on what market you're talking about. Every market has like little differences. Like I remember when I first started trading Forex, I use Fibonacci a lot in crypto, and Fibonacci in crypto, like every altcoin was respecting the 1618, 2618, or the 423 as far as like extension targets. But in Forex, it was like the 1272, and I never saw that in crypto. And this year, everything is running to the 1272. So it seems like a lot of algos and high, you know, more like high level traders are coming into crypto from these other markets just because the volatility suits them. And also it's kind of like a professional trader's paradise with all of the retail traders because it's so emotionally reactive that if you, it's just a much more fun playground to play in than, you know, Forex sometimes.
All right, I got it. And I got to ask one more question. So on the crypto trading side, I know you kind of mentioned it. You said you mostly trade Bitcoin, but do you still trade a lot of altcoins, or is it just mostly Bitcoin and Ethereum because they have futures and you can kind of leverage those?
I would say 90% of my trading is mostly Bitcoin.
Okay. So let's go to the charts. So for me, those that watch my channel, I know you're gonna have your own audience here that may or may not be familiar with my work, but my hierarchy is this. My hierarchy is the shape of the candlestick, then chart patterns, which are always like the opposite of the shape of the candle, right? Because when I called the big breakdown of this descending triangle for a massive Bitcoin crash, that had nothing to do with the shape of the candlestick, and it had mostly to do with that was the chart pattern, because the shape of the candlestick is irrelevant. Here, on the other hand, that is a massive bearish candlestick that I took very, very seriously, and that's why I was anticipating a much bigger correction. And if this candlestick ends the way it does, that is another indication to me that Bitcoin may be in a little bit of trouble. So the shape of the candlestick to me is very important, chart patterns, and after that, sequential is my main go-to execution. And I love it when things kind of align. So in this case, nothing has been aligning. The last time sequential gave me an indication on a weekly level, that was when this candle of green 2 on June 17th went above the green 1 and above the 9, because after that, we price flipped. No red count ever went below a prior red count. We've now price flipped. I would need a green 2 tomorrow to go above a green 1 for me to be bullish on a weekly scale. Obviously, we are rising. The moving averages are still rising. We have broken a lot of the Fibonacci levels here. So from other metrics, we are pretty bullish. Since you're an RSI guy, I'll throw that up and see what I think of the RSI. Oh, sorry, that's OBV. Do I even have an RSI?
OBV's actually been a little bit more reactive as far as giving early warning signs as to what Bitcoin's going to do. At least that's what I found. Do you look at short-term timeframes at all? Like, I mean, do you scalp at all, or do you?
Oh, well, I don't actually trade, and when I do trade, I'm more of a swing trader. I don't scalp. The shortest time frame I've ever traded was back when I was trading futures, and I was using 10-minute candles. So I wouldn't call those scalps. To me, scalps are like 3-minute candles where you're holding positions for maybe 10 minutes to an hour. So when I was a futures trader, I would be a day trader, but I would hold those positions for, several hours.
Got it.
Up to several hours.
Yeah, I mean, it depends on the market conditions. In like really choppy markets or range markets, I'll take like, I'll switch down to like a 30-minute time frame. I developed an algorithm recently with another quant trader. It's basically like a volatility algorithm, and it's been really, really successful on lower time frames. So that's what I've been trading, just because the market's been kind of choppy. But for my spot positions, I usually I'll use a lot of the stuff from like Willy Woo, David Puel, and Maham and Murad to try and just gauge like when's the best time to accumulate. So like the Mayer multiple, some of the NVT stuff, some of their other really cool on-chain analytical techniques to try and really figure out, okay, when can I really go all in here with a majority of my portfolio and be safe? So that's kind of what I use specifically for myself.
Right. So we'll get to the lower timeframes in a minute. So I'm looking at the RSI. The RSI went overbought. It has now fallen out of overbought. To me, this is not a great sign for Bitcoin on a weekly scale in the near future. To me, when the RSI comes out of the overbought condition, that is a shorting opportunity for a stock. That's how I read the RSI.
I would agree 1000%, but it does. So yeah. So for your audience that's listening, that usually means that it's a intermediate term short. But macro is still up because we're above that 40-50 level where it likes to find support on the weekly during uptrends. So yeah, so intermediate, yeah, I could definitely agree with a short, but long term, I'd still say we're early trends of a bull market.
All right, and I'll let you pull up your charts as well if you like. Let me just go through my time frames real quick.
Yeah, absolutely, walk through and then I'll kind of look. Yep. See what I'm looking at.
On a daily scale here, I mean, to me, this was unsequential. This was a 9 to pay attention to, just like this 9 here at the bottom was a 9 to potentially buy and reevaluate in 1 to 4 candles at resistance. This is the kind of 9 you would sell. and reevaluate in 1 to 4 candles at support. And at this point, I am looking for this to go a little bit lower and then reevaluate this around 11,000. Or if we do flip and go higher, I now expect this to complete as a red 1 by end of day. There's only about 4 hours to go. And then we will need a green price flip, and then we'll need a green 2 going above a green 1, going above the 9, assuming we stay above the moving average. So at the moment, I am more bearish than bullish on Bitcoin, while when I did the show at this time yesterday, I was more bullish than bearish, right? But obviously, I become bearish on the daily once the current price started trading below yesterday's candle's low. Your views on the daily chart?
Yeah. Did you want me to share or?
Yeah, you know what? I'm not going to look at the 12-hour. I'm just going to mention the 4-hour real quick. The 4-hour is in this downward sloping channel. I was very optimistic that we can break this channel, well, today and break out, but instead we broke down. So this is not looking very good. And now we're below both moving averages on a 4-hour, and this is not looking very good for the 4-hour chart. And if we start going down, well, the channel, the assumption is that this channel will take you down below 8,000. So now I'm done with my Bitcoin outlook. I will hand over screen share to you. Go ahead, pull up your Bitcoin charts. Probably start with the higher level time frames and work your way down.
Okay, let me. My chart is fairly naked right now. I didn't prepare anything, so I'll just kind of go through it as we.
Okay. You can also pull up your recent TradingView publications. I mean, I used to do that back in 2015 when I started. I used to almost every day I used to publish on TradingView. You can still go back and look at my 2015 publications on TradingView, and it was way before it had all these elaborate cool things to draw on it like they do now. And
yeah, I would have to. I was looking for, this was my last analysis. I was looking at this basically previous trend line.
When did you post this?
This was, my last post was July 23rd. So about.
Okay, so that's a while. That's about 2 weeks ago.
Yeah. So what I was looking for was I was looking at this candle right here, and it just looked like people were, they were looking to get liquidity to get long. So I was looking for, you can see here, it says watch for another one like this. So you're looking for, I call those exhaustion wicks. And so I was expecting another, when I posted this chart, it was basically kind of right here. You can see we got that wick right there when we wicked down to 9,000, but we did hold the 70.6 Fibonacci level. That 70.6, that's also from Forex. That's a really, really common Fibonacci level that comes from Forex, as well as the 88.6. The 70.6
I'm familiar with the 88.6. I'm not familiar with the 70.6. That one is new to me, but that's also because I've never traded Forex, so I have no idea.
So the way that I explain the 70.6 and the 1272, I call these the front running Fibonacci zones, because what happens is when the 618 breaks, a retail trader is like, oh, I'll buy at the 786. So they'll usually capitulate their position on a closing below the 618. But what typically happens is it'll get front run by this 70.6 from an algo or a front running trader that understands people are waiting to buy the 78.6. So there's a lot of demand zone of liquidity from people that are buying on the 618. I am very rarely a 618 trader. I almost always like to buy the 76 or 78.6. That's the zone that I prefer to buy. And then the same thing with how the 1272 works is, once the all-time high breaks, most people expect it to get to the 1618. But a lot of times it'll get sold and shorted at the 1272. It's kind of like a front running Fibonacci zone that it doesn't quite reach the 1618. And I've seen that shown up on almost every trade I've taken in crypto from then. So I was looking for something like that exhaustion wick. I didn't buy on that exhaustion wick. I like to wait to see a little bounce. So I bought around 9,500, 9,600, and I wrote it up to around 11,000, 11,700. And that's where I took profits. And I took a short once we got rejected at that 236 zone right there. I've got the tweezer top. Very, very limited short. And then from here, just from what I've seen recently, everybody was asking me, what's the position? What's the position? What's the position? But for me, I don't really like to take a position on like a symmetrical triangle like this. Because I mean, you can get some indication like there was, I don't know if you were watching, are you an order book guy at all?
I am not at all. I actually try to ignore the order book as much as possible in my trading. And I was the same when I was trading traditionally as well.
Definitely in crypto, it's really hard to use order books just because there's so many spoofers. I was talking to Sam from FTX the other day, and we were talking about spoofing. And there was a guy, while we were having a conversation on my podcast, it was like the guy was flashing a $70 million position, and that's not a position that's going to get filled. And basically, he's just kind of, trying to scare the market into the direction. But yeah, so in a symmetrical triangle like this, you can look for some clues to see which direction it's going to go. My volatility algo was short. And I don't like to trade against it because it does usually pretty well. But this 30-minute 200 EMA has been pretty good for some scalp plays for any of your scalp traders. Just kind of historically, once we kind of break above it, it usually acts as a pretty good support where it bounces off it a bunch of times. So I was watching that 30-minute 200 EMA that was kind of supporting the price, but this multiple rejection and these kind of exhaustion buy wicks, it was setting up for a play either way. I did not take a position. I had a long position back from here that I think got stopped out in profit, but by and large, I was just kind of watching to see which way this broke. And now what I'd be looking for is, because the market's given us some sort of a direction, we broke these key EMAs, just like what you were saying, I would be looking to wait for the bounce and then get short. But it's possible that we just kind of dump right through it because it's the weekend and the liquidity is really, really terrible, and sellers can kind of do whatever they want in this market. And same thing with buyers. Just with the order books, the way that they are, I've never seen liquidity this poor on BitMEX and Bitfinex and Binance. I mean, the liquidity has been really atrocious. I think we had, I saw a couple of traders where their stop losses yesterday, the slippage was like 200, 300 points. And so it's like your stop loss was at 11.7, but due to the violence of this mark, of this candle, they got filled at like 11,400. And on, 10X, 25X, they just lost, I don't even know, like 100% or something like that.
Right. Yeah. And this is why, like, trading crypto is actually really, really hard. Hey, can you just go back to that, where you were before, the 30 minutes?
Absolutely.
I try to comment on a couple of things, and this is, I guess this is a free lesson for, this is what I teach at my workshop. Basically, the way I trade moving averages, and what you said is exactly correct, actually. So for me, what happened on that giant candle today, right? The big crash below the moving average, that's not a shorting opportunity. I don't trade when the moving average is broken. I prefer to trade. I prefer to trade all of those buying opportunities, because if you look at this chart alone, you have 1, 2, 3, and maybe a 4 times where the price bounced off the moving average. That's what I'm looking to go long. When it breaks through the moving average, I do nothing. I mean, I get out. I don't have any positions. And now, if that arrow does come to fruition, that is a potential shorting opportunity for the same reason why it was a buying opportunity, over there, like where your cursor is.
It was key support and
right. You wanna buy support and you wanna sell resistance, but you don't wanna do something stupid because you don't know if it's gonna hold or not, and that candle just broke down through it. I will also add that if the price falls further, like right now, I don't see a good buying opportunity, assuming that we're going to go into that moving average. But if we fall to the $11,000 zone, where we're hitting the daily moving average, then there could be a buying opportunity, even if we turned bearish and are going to go down to the $8,000 zone.
Yeah, you also have this, you also have, you know, a little bit of previous resistance here, but, you know, that would be, I don't know if you saw, you know, the kind of the
Oh
meme.
yeah, so that looks like it could act as support.
Well, I don't know if you saw the meme pattern that was going around, but this Adam and Eve that broke up, a measured move was supposed to take us to about 13.8. Because Adam and Eve, you want to go from the bottom to the top here. So it's about 18%. So once it broke, this should have taken us to about 18%, which is around like 13.1, sorry. So, but what I see now is you were calling out that 11,000 level. That's that moving average level, but it's also the neckline of that previous Adam and Eve pattern. So sometimes you'll see those come back, retest before they continue to the upside. And what's interesting,
Right.
when I use the log mode, not on, I'm on Coinbase right now. Also, this is not any sort of it's more I think, let me see, Binance. Let's see. I can't remember if it was Bitstamp or some of the margin exchanges, but one of them showed this candle right here. It broke down and then retested it perfectly as support on kind of these lower time frame trend lines.
Mm-hmm.
So yeah, so a candle like this, that's what I like to see. I like to see that's what I call like buyers capitulating. But then the smart, so the sell down is like people from up here that kind of capitulate, or this could also be, you know, people that got long up here, maybe they're on 10x or something like that. Well, they have to capitulate down here, and this is where smart money comes in. So that's something that I'll trade. That's a really nice like reversal candle. So I would look more of like some sort of a regression back to, you know, one of these key moving averages that we really, the key moving average for me on the daily has been the 100 MA. That was a really, really key moving average during 2017. They got tested several times during the initial, you know, points of the run, but it's never been tested here. So the 100 MA is one that I've definitely been watching. Am I on the daily? Yeah. And then on the weekly, the 20 MA, let me get out of bits.
That one's monthly, but yeah.
What am I doing? Yeah. So the weekly 20 MA has not yet been tested either, but I would agree that that candle is not good. That is a, you know, that's usually
right. Now again, we still have, you know, a day and a half to go. We have no idea how that candle is going to close, but at the moment, it's not looking good.
Yeah, and we do have the parabolic. I mean, we still have a few trend lines that we can kind of go off of if we look at the daily. You know, that can act as support down here. We've got the 100 MA on the daily, which kind of correlates with this trend here. Let me remove my RSI and the 50, 20, 200, 250. Yeah, let me just get rid of some of these. Okay, so we've still got this trend line down here that hasn't been tested, and that kind of correlates with this 100 MA. So if I was going to be like a spot buyer and I wanted to get long, that's probably where I'd look to add on to a position. Just because that 100 MA back in 2017, and I don't know if you're like a historical guy, but that was, you know, during the initial move, we always saw that 100 MA tested twice before it went into what we call Super Saiyan mode. And same thing back here. We saw it tested once, tested twice, a little bit of a bear trap there. But so that 100 MA, I really like to buy on those as a spot buyer. If I'm not long from like, let's say 3,000 to 6,000, that would be a really good accumulation from a spot buying perspective.
All right. Hey, I had one more question I didn't get a chance to ask. If you go back to your trading view where you had those Fibonacci levels,
Yeah.
My question was where, I see where the top is. I see where the 0 line is. What are you using for your 1 line?
The first pullback kind of right here. So wherever it starts, this kind of what I call like a new impulsive wave, that's not a pullback. That's not a pullback. I would say, but I would say that that's kind of where I would start it from. I mean, you could make the argument to kind of go back and, you know, use some of these other things. And yeah, so I also kind of throw in stuff like this, make it really simple to read. We hit resistance, you know, bull trap, swing failure. I don't know if you're like a fan of the SFP patterns that a lot of the price action traders on Twitter talk about, but that came from, that's another Forex concept from trader Dante. I don't know if you know Dante.
I don't. I'm familiar with very few traders, which is why I decided to, you know, try something different and have a co-host for, I mean, I would love to have, I mean, my channel is kind of erratic. I kind of do these shows randomly, but I would like to
Sometimes you're on
start
a
doing the
camel.
show with like a different trader every time, just so I can, kind of have an idea of what other traders in the space are doing, and maybe even try traditional space. So we'll see how this format works. So yeah, feel free to recommend other traders that I could potentially bring on the show like you are here today.
Yes, some Trader Dante is really good. He's been around for like 17 years. I don't know if you know Crypto Cred, but a lot of his concepts and stuff came from Trader Dante, as was I think that was actually who.
The only honestly, look, the only traders I know are the ones that have been on the channel,
Wow. Okay, cool.
or the ones I used to pay attention to before crypto.
Okay, cool. Some of my previous analysis, the 200-day weekly moving average was probably one of my most popular charts. I drew a magnet to save us all. Actually, my most popular was the CNBC one, but I drew this giant. It was basically, we were just sitting on the 200 weekly MA. That's where I bought actually a majority of my spot position, just because historically it had never been broken. It was just basically like a meme chart. But the other one that most people know me from was this one right here that had about 100,000 views. It was the CNBC counter trader chart. I don't know if you ever saw that one.
Oh, that looks cool.
It's basically
Nope, never seen it.
every tweet from CNBC. These were all bullish tweets at the top. Brian Kelly, all these different ones.
Yeah.
Like super negative bearish tweet almost called the exact bottom. Like if you had traded this, you'd probably be a multimillionaire. But that was back in August of 2018. I was actually one of the very few bullish people on Bitcoin. I did this right here. This was a video where I was shorting Bitcoin at 6,400 based on, I said this was a really hold on, let me get my stay focused on.
I certainly was doing that as well. Kind of wish I wasn't. That caused me a lot of problems.
Shorting.
Yeah, not gonna get into.
So this moving average right here, it kind of reversaled here, and this was an ascending broad wedge. This was actually like one of my best trades. I posted my trade. It was like a 7,800% return trade off of that move, because I didn't expect it to break that vicious and that hard, and I just kind of held it open. I closed some at like 4,800 or something like that. But yeah, there were a few good setups. Raven, this is what I was talking about. These were a few of my positions. Raven was at like 280, 270 sats. Really strong reversal, and that's the one that popped to the
all right. Let's change gears here. Let's get back to the current markets, and I wanted to get your thoughts on some of the altcoins. So I can go back to my screen share, or I usually only look at like Ethereum, Litecoin, and Bcash, mostly to make fun of them because of how bearish they've been and how much they're falling. Now on sequential, they're all hitting nines. They're starting to bounce up a little bit. But I still think that they're going to go significantly lower, and the exodus out of altcoins is going to keep going down. This is, what are we looking at here? Ethereum versus Bitcoin.
Yeah, so I would probably be a buyer if we reclaim this point right here. That's when I would buy.
Yeah, no, I'm with you. I mean, I use other exchanges that have a longer history, but according to this exchange, it's the lowest it's been. And right now, if it wasn't for a 9 on the sequential, there would be zero reason for me to be even cautiously, like I'm still bearish, but now I'm a little bit more cautious. Like I think there is a bounce coming, probably back to that line before a huge rejection and have it go to new lows.
So I have a question. So on your TD sequential, the way that I learned it is a 9 isn't necessarily a buy. Usually what I look for based on kind of like the traditional way that I learned it was a 9, 13, 9. You want to see that kind of pattern play out for a perfected buy. Is that the way that you look at it too, or do you look at it more of like the context with support resistance, your moving averages and other things to kind of say, all right, 9 is definitely a potential to reverse, but
the beauty of TD sequential is that you don't have to trade it the way Tom DeMark trades it, who is the guy that is credited for creating it, even though I have evidence that it was actually Larry Williams that created it. So I have no idea what the hell happened back there in the late 70s before I was born. But the way I learned it from a trading desk is that nines very often give these 1 to 4 candle counter trend rallies that are tradable. And occasionally, or they turn into full-blown rallies. So you want to be in that trade beforehand. But if the bounce off the 9 fails, then you're staying with the trend. So a 9 is a glass half full, glass half empty, where you need to be a detective and figure out, is a 9 killing your trend or beginning your trend? And a 9 is tradable on its own. You just have to be more cautious about it. But the way you learned it is actually the traditional way of learning it, where you are very interested in trading the 9 if it comes off a 913 prior to that, because that's when the trend's been really moving in the same direction.
Yeah, that's kind of how I've always looked at it. That's a random TD. I have yours, but I haven't started playing around with it since you gave me access. But yeah, so I look at the 9, 13, 13 as kind of like perfected buy, perfected sells, but I will look at those 9 candles for, giving me clues as to, is this thing going to reverse? And then I like to see confluence between, say, a 9 candle as well as some divergence on the OBV or the RSI.
All right. So, all right, you want to, I don't know if you want to throw up any other altcoins. Other than that, maybe let's have a word about gold and traditional markets.
Gold in the traditional markets. Yeah. Do you want to bring up your screen and I'll kind of comment on some of your stuff that you're looking at?
If you don't have preset charts for golden stocks, I'll put it up on mine. Everyone has seen mine because we're on my channel. But if you have preset charts of those, feel free to.
I don't have preset charts. I don't like to have preset anything. I will always look naked first. I'll mark off my levels. I never save anything personally. It's just how I've always traded. So I'll just kind of open it up. I'll look at the weekly. I'll try and see, where's my next key levels? What are we looking at? So I'll mark it off. And then I'll pull up some pivot points and some other things just to kind of get an idea of, what we're looking at. Just kind of looking at gold, we're kind of mid-range here. It's very, very sharp trend. I would say 1570 is maybe the high. And then I would want to see a pullback. If I was going to be a buyer, I would probably want to wait for a pullback to this 1370 level. And I think we could see that with probably some more bullishness of stocks. The dollar, starts to weaken a little bit. So we start to see better trade tension. So the market rallies a bit more and gold kind of reverses back to here. I haven't looked at TD sequential moving averages or anything like that, but just from a high level standpoint, weekly support resistance, that's kind of what I'd be looking for, is a little bit of a blow off candle in that 1570 range. And then kind of a short-term reversal back to 1370 before a continued uptrend.
Okay, thanks for that. And it's very interesting what you said, because, and this is one of the things that I always try to teach people. You want to learn how to trade, and then you want to come up with your own style. Like I, for one, love having, charts pre-saved with annotations until they start to get too cluttered. And your style is very different. And the point, it's not about whether one is better than the other. It's about what makes you a better trader. And and this is what I kind of do, because my whole thing is based on education, in that, sure, when you're starting out, learn from a bunch of people. But unless you can develop your own style and have your own confidence in what you're doing, you're going to struggle and you're going to blame everybody else for bad trades.
I agree with that 1000%. And for me, man, I just always want to see it with fresh eyes. So just kind of viewing it again, I see that this trend line was actually broken and retested. So we don't necessarily need a horizontal retest, because it looks like we got the breakout retest here. And we had this ascending triangle pattern, which was kind of, a solid bottoming out. But I haven't done any recent Fibonacci's on it to see if we're at any sort of a key level. Oops.
Yeah, put those in. I'm curious what you're gonna go from the all-time high to the swing low.
So I did a really interesting gold chart. I'll have to bring it up, but so I would have just used this pullback. You can use the all-time low as well, just to see.
Sorry, I didn't mean the all-time low. I meant the low in this.
Oh, so,
I meant from the high to the decade low. Are you going in, or are you doing your Fibonacci's off the uprise?
so I look both. I do this to see what we pulled back to, and then I do this to see, you know, where our resistance levels are at. Are we hitting a 618? Are we hitting a 382? Is there anything? Does this level that I just marked off, does that line up with my Fibonacci at all? And so what we can see is we actually came down to the 50% Fibonacci from the all-time low to all-time high. But that's not really any, the 50 Fib doesn't usually get respected too much like that. But here, see that 70.6 level? So from swing low to swing high, that 70.6 level, that level, man, shows up everywhere I look. And
that's interesting. I should add that to my Fibonacci list. I mean, like I said, my first time seeing that level. So I'll try to keep an eye on that going forward.
Yeah, what I can also show you is I actually have Fibonacci levels that I created called Canfield Fibonacci levels. I've never seen anybody use them. I tried to give credit to somewhere, but what they are is they're actually extensions off of beyond 4.23. They're the 685, 1109, 17.94, 22.6, and it goes up and up and up. And so the way that you derive the extensions, the 423, is it's the Fibonacci sequence is 1, 3, 5, 8, you know, it goes on and on and on. And the way that you get the 4.23 is actually the first number divided by two numbers out. And then you divide it backwards. And then, so to get the 685, you go 3 digits backwards to divide. To get the 1109, you go 4 digits backwards. And what's interesting is it shows up remarkably well in traditional markets. I think gold applies pretty accurately. And I'll show you gold, and I'll show if you want to. I mean, you don't have to see this. But
I recommend using, for your ticker, instead of using the CFD, I recommend using
XAE.
GC1, the futures.
Oh,
the perpetual.
I look at both. I look at the CFD, and then I look at the futures market both. Let me do this extension. I don't know if you want to see this, but it's really interesting how you can apply it to long-term extensions. Okay, so the way that I apply it is I take the very first listing price like this, and then I will just
if you use the magnet on the side, it will automatically attach it to the low.
Yeah, I never use that.
Okay.
But yeah, I can do that if you want.
And then, yeah, if you just go there, it'll automatically like stick it right there.
But what I found is that this 17.94 shows up in a lot of different, let me move this out of the way so you can see this a little better.
Because considering how far back you're going, you might need to be somewhat exact.
Yeah. But see this 17.94 level?
Mm-hmm.
So it shows up remarkably well in a lot of different markets. Bitcoin actually 20,000 was the 17.94 level as well. And then you can see this 1109 acts as support. And if we go back, what you'll see is the 3618 respects the 685 acted as resistance. The 2618 was a very key resistance here. But it's very interesting how these Fibonacci levels show up in a lot of traditional markets, but it's more like long-term forecasting. And what this does is it also gives you extensions. So the 2903 is the next level up beyond the 17.94, which would give us a 2,700 per ounce gold if this 17.94 level breaks to the upside. And then what you can also do is beyond that, you can also do like your traditional Fibonacci and see if like the 2618 also lines up, or the 1618 as well as that 2694 level lines up very similar around the 23 to 25. So with the double confluence, I would put a target around this zone if we get the break at the 17.94. So it's really good at like long-term forecasting, like decade trends.
All right, no, looks pretty cool. And you've already provided your view. So you think that gold has bottomed, and while you are looking for a pullback, most likely we are going to be heading back to all-time highs.
With the macro, no. We'll head to all-time highs if we can break the all-time high. So I'm like a strength buyer, right? So if you
Oh yeah, no, I'm with you as well, which is why people, like, to me, only after gold broke the 38% Fibonacci, sorry, I see 38 on your end. Only after gold broke because I usually have them in decimal, so it's like, I don't know, confuse me for a second. But only after gold broke that 38% Fibonacci, that's when I finally took my at that point, like the break of that Fibonacci line, that's when the chances of going to all-time highs are now above 50% versus going to new lows. So until we broke that Fibonacci, I had a more than 50% chance that we're going sub 1,000. Now that we've broken the 38% Fibonacci, I have a greater than 50% chance that we're going to challenge the all-time highs. Now, this doesn't mean it's a breakout, but it means now, for me, 2,000 is more likely than 1,000.
I would agree with that. So this pattern, most people look at ascending triangles as bullish patterns. I am more neutral on them. There was a quant study that I read that said, they break up 60 to 70% of the time. But for me, I just wait for the pattern to develop. I wait for a break up or break down, because this is, to me, is just consolidation. Now, it does show that there was a lot of supply at the 1400 level, and there was demand because buyers were stepping in and we couldn't break down to the downside. But the key level for me is this level that I marked off before. I was a little bit low, but it right around that 618 level, the 1584. If we can break that, then I'd be very, very comfortable holding for a challenge of the all-time highs and then a push beyond. And so, like I said, I think if the dollar continues to get stronger and the markets tighten, they'll look at this as an alternative store of value out of markets and out of a lot of the traditional things that most people are in. And I think retail is really going to get slaughtered in the markets if they don't do something about the way that China is handling their currencies.
All right. Thanks for that. You want to do stocks?
Yeah. Like I said before, pretty much the only thing I've been watching was Twitter. I really like Twitter from a fundamental. During elections, I love to see their ad spend goes crazy, so their earnings usually do really well. Trump brings a lot of people to Twitter to see his tweets and all that. And from me, we broke this key level right here. And once we broke that key level, I bought the pullback, and now I'm holding some Twitter options and kind of seeing where this is going to go. We got an SR flip up here. And for me, this looks like we're going to want to push higher. We've got a couple of different trends now that have formed. We've got that lower trend and this upper trend. So even if we kind of hold at that 38, 39, I'm well in the money on my options called right now. What other stuff have you been looking at? I did play Tesla. I had a tweet on Tesla.
Well, I was actually thinking more of the S&P 500 outlook, not individual names. But you're welcome to talk about a few individual names. I always do.
Yeah, we can look at whatever you want. Wow, that's an interesting candle right there.
Yep.
I'm looking at the weekly right now.
Yep.
Was there a moving average right there? Was that the 20 MA? 50. 50 was. There was one candle here. That's a very interesting reversal candle. But it could be institutions loading a short. What are your thoughts on that?
I think that if next week we start trading above that candle and we start, we fully close the gap, I'm gonna be bullish again. Like to me, unless we were gonna go below the prior swing low that you see bouncing of one of your moving averages, I think it looks like the 100 or something. Like until the current candle was gonna go below that prior swing low that you have at the 100 period moving average, I was not scared in the market. And that's a reversal candle to me, even though you want to see that candle after a noticeable downtrend. Oh, I have like leaves coming down on me. Jesus.
Where are you at right now?
I'm in the woods of Pennsylvania,
Oh,
and
nice.
so right now I'm more neutral than anything, but I'm neutral and optimistic that we had the swing low and new all-time highs are coming.
I have no doubt, man. I was just talking about this the other day with a couple of traders. The Japan's economy is a really good kind of template for what the United States economy could be, because there, or as well as the so Japan's economy has been relatively flat. Our economy can go relatively flat, but Japan's stocks have pushed up and up and up, even with a flat economy, because of the way that they manipulate their markets.
Well, yeah, that's because the Japanese government is now owns like 60% of all the stocks because they keep buying into them.
Exactly, that's what I'm saying. So,
which US hasn't started doing yet.
Right. So the way that our government is approaching the markets with our plunge protection team, the way that we're, especially the way that President Trump is talking about the Fed and the way that we need to handle our currency, I have no doubt that we can push to all-time highs. They've done it before and they'll do it again. We had this very minor correction on the SPY back in 2018 in December. Which is interesting. If you look at the RSI, we had a massive swing high failure on here. I did manage to take some good puts on this swing high failure RSI, higher high, lower low, lower high here. But I have no doubt that they can push it as high as they want for as long as they want, because the dollar is still, one of the strongest currencies in the world.
And also, like, people forget that Trump has to get reelected, and the best way for him to do so is with a strong stock market. So he's going to do everything in his power to make sure the stock market goes up. This is what always happens at the time of a president's reelection.
Yeah, absolutely.
All right, let me grab screen share over from you, because we do have to start wrapping it up soon.
Yeah, I appreciate you having me on, man. Hopefully I didn't talk too much.
No, you did great. I want to, real quick, I want to go over to my website, and I just want to remind people of the upcoming event I have going on in Bali. This is going to be in October 19th to 25th. It's a week-long event in one of the top resorts over in Bali. Here are the traders that are going to be there. Ugly Old Goat, Van Zen, Willy Woo, myself, obviously, Socrates, Leah's coming. There'll be a couple of more. And this is, there's no actual plan yet. It really depends on who else is coming. If there are more people there that want to learn from us, we are happy to teach our skill sets and what made us successful, profitable traders. If everyone that shows up is already, has their own trading style and is not there to learn and is there to collaborate, we're happy to just, discuss all kinds of ideas. So that's what this event is. Hopefully I can convince some hedge funds to come that are looking for potential trading talent that can help make you provide capital for your trading strategies. So this is the plan for Bali. And of course, you get a lot of freebies with registration, which is not cheap, but you get all of my webinars and Hyperwave and subscriptions to Van Zen and Ugly. So that's the event I'm doing. And you said you're down in Florida, Jacob. I don't know if you're up for Bali, but you should definitely come out to Las Vegas in October for the next Unconfiscatable.
One of my employees lives in Vegas.
Nice. Yeah, come out in February, man. That's going to be the second annual Unconfiscatable with an awesome poker game. You play poker?
I almost did not become a doctor to play full time professionally when I was in college.
Oh, dude, so you got to join the next poker game, man.
Yeah, I would love to. When is it? February?
Yep, this is going to be, the poker game is going to be on the last day. So it's going to be Sunday this time, because we're going to try and have more people. And registration is going to start later this month. And there will be a 0.1 Bitcoin buy-in or cash equivalent. I'm kind of dealing with the Nevada laws at the moment to see if I can actually do it in Bitcoin.
Oh, that would, yeah, I'm down. February 23rd. Yeah, I should be able to mark it up the calendar, man.
All right, cool.
Awesome.
And yeah, that's it. Unless there are, I just wanna. There's really not much to say about stocks. Kind of did on Friday. What else you said? You mentioned Tesla, right? You were
Yeah,
gonna look at that one?
I bought at that 178 level. That was actually the 0.618 pullback of the all-time low to all-time high.
Oh, you bought over here.
Yeah.
Yeah, see, I was also very bullish because of the sequential. This was a 9 on a daily right there. So the sequential lined up very, very nicely. In fact, it was a double 9, which is something that isn't in the original code because because mine is really customizable here. Oops, that's the triple moving average. So mine is customizable if I put in the setup. So right here, there was a 9 that immediately went into another 9. And
Oh, wow.
And the way mine is designed, this is what I refer to as a quasi 9. This means that this candle was a 9 when it started, but then it flipped over. And I've been noticing that these double 9s have been very, very good buying and selling opportunities. So I was also bullish Tesla right here at the low at the 180 area because of the double 9 sequential.
Yeah, I tweeted that I was taking some long options, and one guy he messaged me. He made like $250,000 taking the same options as me.
Wow.
Because it was a 44% run, but the options, I think it ended up doing like, I don't know, like 4,000% return for the guy or something like that.
Yeah, and guys, that's the power of options, which was basically my specialty as well when I was trading. And I'm still planning on doing a workshop, but it's also not cheap. It'll be 2 days, an options webinar in 2 weeks. Actually, I have so much. I'm gonna probably disappear for like a full week in order to put all my materials together. Just like yourself, this is pre-internet stuff. I mean, I learned options over 15 years ago now, and it's literally all on paper. So I got to convert that into something that could be presented in a webinar. So yeah, that's a good trade that he made right there.
Yeah, my target was 244, but it ran up to the 270, 275 level, but it hit on my chart. It was basically like high time frame resistance. I think another Fibonacci level or something like that. So I closed my trade, but he messaged me and showed me his screenshots. I was like, oh, nice trade, man. It's crazy because people can make a lot of money off of free Twitter content,
yeah.
It's crazy.
Yeah, but at the same time, like I always caution people that you get what you pay for, and when you follow free advice or paid advice, I'm a huge believer in learn to do it yourself, and like you don't follow other traders, you make all your own decisions.
Yeah. I mean, so I will ask to get different perspectives. Like I have a few very specific few people that I trust explicitly. And if I'm kind of like a 50-50, I don't really have an edge one way or the other. If the market's like kind of ranging, I'll try and get their perspective. Cause like you're a TD sequential specialist. You have other people that are specialists in their area. Elliott wave is something that I have never been able to really trade off of with any
I'm with you on that one.
high rate of success at all. So I don't, so I don't use Elliott wave myself personally, but there are some Elliott wave traders that are really good traders and really kind of understanding market flow and where it's going to go. Other ones are really good at studying funding rates of the open interest on Bitcoin, who can really predict with accuracy which way the markets are going to move. But yeah, 2017 was really interesting just in general because there was a lot of applicable strategies because it was so young. You could arbitrage, you could scalp, you could swing. There wasn't a lot of, leverage interest, but there were so many different strategies in play.
Yeah, and again, I know earnings had a lot to do with it, but if earnings was only off by 1 day, this would have been a beautiful double 9 off at the top, just like there was a double 9 here at the bottom.
Yeah, I think that was the CTO quit. I think that was the catalyst for that or something like that. It was,
Is that, and they announced it on the earnings call?
yeah.
Ah, okay.
He like resigned
Gotcha.
his position or something like that. What do you think of Beyond?
Oh, the Beyond Meat stock?
Yeah, Roku was the one big miss I had. I was going to take some Roku options, and my level got front ran at 29. It was if
Wait,
you
well, give me a date.
go all the way back.
Okay.
Yeah, it was down in the 30s. Yeah, right there.
Oh, yeah.
Yeah, I had buys at 26 or something like that, and they got front ran at like 28,
Yeah,
29.
I would have missed it completely because to me, I would have been eyeing Roku again. I'm off sequential. I would have been eyeing Roku over here in the 31, 32, and when it continued going down at this point, I would have expected it to keep going lower. Now, I also have a little bit of a rule that I don't really short stocks that have fallen over 50%. I mean, anything can happen. There could be bought out, things like that. Like I do it with options. I might buy some puts, but I would never short them outright because I've seen disasters occur, especially with buyouts or mergers. But I would have missed this level because there is nothing here based on my top TA candlesticks, sequential chart patterns. There's really nothing here telling me to buy it. So I'm not saying I would have been short, but I certainly would not have been looking for longs. I would have been
If you
looking
go
for
back
other
and look at
opportunities.
the weekly, you'll see a strong support level. And I think
Let me see the weekly. Maybe the weekly would have given me something at the end of 2018.
you'll see the yeah.
Nope, same thing. On a weekly, it's the same exact thing. I would have been I probably would have been buying it here on a weekly at the 40 range. I would have been buying it on this 9 off this reversal candle, and that trade would have been stopped out for a loss.
It did reverse on a
But
9. It did reverse on a 9 buy right there.
But this is amazing. This
Yeah.
913 weekly at the high. I mean, again, this might have been a failed trade, but if I was trading this chart, I would have made ridiculous amount of money here off of this. This is why I'm starting the notification service because I could have been notified for this amazing weekly 913 preceded by an aggressive 13, and then here's another 9 for a decent pullback. While this buying opportunity would have failed, and there is nothing here for me to buy based on what I see in the chart.
Yeah, I missed it and I never bought back in. It never pulled back, and then I kind of moved on to crypto. I think Bitcoin was, I don't remember, but yeah.
But I'm really loving, like, considering, yeah, sure, this was a failed trade based on TD, but this is a monster success of TD. This is a decent success of TD, and this is a decent success of TD. So I will definitely take these odds. And there is a 13 coming next, but there is another countdown in the background.
Yeah, I'll have to play around with your sequential. What I like about yours is
pretty advanced.
It shows the 13 kind of below that.
Yeah, it also has all three of them: the combo, the aggressive, and the traditional. And it's pretty customizable. Like, you can display or not display whatever you like. All right, and what was the other one? Beyond Meat. We'll look at that, and then we're probably gonna have to call it a day.
Yeah, no worries.
It should be on my list somewhere.
We don't have to look at it. It's more of
No, I don't mind.
Beyond and Tilray. I feel like the same people that were in Tilray are in Beyond this.
So this was, I called this one. I called this top off of sequential on a weekly scale, and what I've noticed is we had some really notable IPOs in the last year with Lyft and Uber and Zoom and Beyond and several others. And for the first time that I'm looking at the very first time a sequential tells you something on an IPO, and they've been pretty damn good. like all of these things, like here's a weekly 9 on Beyond. That was the week of July 22nd. You know, that's a beautiful time to get out if you were long, potential short. Again, shorting is tricky. And on a daily scale, this would have been beautiful, right? I mean, earnings. So you really don't want to trade earnings. We already discussed that part. But a reversal candle, not my perfect reversal candle. Would have loved to see this in reverse. Would have loved to see this candle upside down. But you know there's a weekly 9 here, and you know there's a daily 9 coming. This is the time to get out of the stock. And right now, I would be bullish. On a daily scale, you have a 9 right at the 50 period daily moving average. So I kind of like it here. I like this balance of support. I like this 9. To me, this is a very low risk buy. And you know when you're wrong. You know, the moment this thing closes below the moving average, the moment it gives you a new low daily close, that's where my stop loss would be. Worst case scenario, my stop loss is below the swing low, which is at around 158. Though on a weekly scale, yeah, it's in this 1 to 4 week correction range. And maybe it corrected enough. You know, that's a pretty big move down. I know it's a very highly priced stock, but I would be leaning bullish here. You?
From your chart, it looks good. I don't have it pulled up. I can pull it up. I feel like everybody and their brother is trying to short it, so it could be setting up for an epic short squeeze. And based on it looks like it broke a trend line just on the low time frames, hourly, just even today. Let me look at the daily.
Well, it would have been Friday, where markets are closed today.
Not today. Yeah. I don't even know what day it is. Let me see.
I know they got on me. So yesterday on yesterday's video, I was talking about people. I've never seen someone do like moving averages, like a moving average ribbon kind of thing with prime numbers. And then I was, naming Fibonacci numbers. Like, so sometimes we say silly things when we're on live camera.
Yeah, I do that quite frequently. I used to do live streams every single day, and my brain eventually just kind of burned out from.
Yeah, live streaming is a different animal. All right, so give us your take on Beyond Meat, and then we'll be calling it a day.
Cool. So just looking at it on the daily, it looks like we might get like a short. I see your 9, but it looks like we might get a short-term bounce maybe to 173, which would set up for a short opportunity. Because that was a really key resistance level at 174. And so I wouldn't be looking too long term as far as like bullishness, but let me look at the 4-hour.
I'm looking a little bit higher. So I am looking at that 20 period moving average around 183, and along with a 1 to 4 candle, counter trend rally off the 9. And the 1 to 4 candle counter trend rally off the 9 is in terms of time, not price. That could be $5 or that could be $50, right? We don't know, but I'm looking a little bit more.
There is a gap there. Yeah. There is a gap at 183, so that makes sense. We could see that reverse, but
yeah. So I'm looking a little bit higher. I'm looking for maybe the 180 area. That would be my target, even though I hate setting targets.
Yeah, I would say 174 target 1. I would scale out a little bit just because that was a really strong resistance point before that it broke through. But at 174, I'd scale out, and then 180 to 183 is probably when I would take my full position.
Yeah. So like when I teach, I try not to when I try to discourage people from using risk reward ratios, because you can quantify your risk. You don't really know where it's going next. But as an options trader, you have to have an expectation of where your reward's going to be, because that changes what options you're going to buy.
Yeah.
So that's when it becomes critical.
The cost of them, like the cost basis of them, a lot more factoring goes into that kind of stuff.
Oh, and again, here's another example of a recent IPO. This is Lyft. And here is the very first sequential 9 on Lyft, marking a beautiful top. And and this is the second 9, and it hasn't had any 13s, obviously. These were the first 2 9s, and this is the second 9. Now, this wasn't a great buying opportunity based on the action that took place after the 9, but still, I really liked this first appearance of a 9, telling you to get the hell out of lift.
Yeah, that was great trade.
All right. Obviously, I didn't take it, but I did tell people about it.
Do you have a lot of options traders that follow you?
No, none, because I haven't taught options to anyone yet. I'm teaching my first options webinar in 2 weeks. So I try not to. I've never in my Telegram channel, where we are currently doing free notifications of TD, I've suggested an options trader too, but all my options trading is kind of direction neutral these days. I haven't directionally traded options in a while either, and because of my travel schedule, like I just can't trade. Like I'm just not. It's gonna be bad because I'm not in front of the market enough to actively trade.
I stopped going to conferences completely in 2018 because they were just distracting from my trading, and most of my money comes from trading. So
right.
I am in front of the markets all the time. If I'm not in front of the markets, then I can't manage positions. And yeah.
All right. So no, that's exactly right. Like you either got to be a trader, or like my job right now is like a Bitcoin evangelist. But we're going to have to go ahead and end it here. So all of your links are in the video description, the YouTube, the Twitter, your trading view. But go ahead. Closing thoughts. Jacob, thanks for joining me. I learned something, which is always great.
Yeah, man. Appreciate you having me on. It's been a lot of fun. And next episode of my podcast, I wanted you on there to go over your TD sequential.
Sure, I'll try. How often do you do your YouTube podcast?
So I just launched a new podcast. It's called Crypto Trader Podcast. It's not like officially launched yet, but I've got about 6 episodes already recorded. And the whole point of the podcast is to find trading edges in the markets. So it's instead of like, hey, how are you? What's your history? It's more like, how do you trade? How do you get your edges to, trade profitably, more so than like, just kind of general interviews.
So you have guests on that podcast.
Yeah. Yep. Yeah. So my YouTube, I was doing them every day. I took like a 3-month hiatus so I could focus on trading. And then I had a baby in the midst of all that. So I'm going to be getting back to at least hopefully 2 to 3 times a week, streaming charts on YouTube. And then the podcast will be like episodic weekly episodes.
Okay, very cool. All right, thank you so much. All right, Jacob, thanks for joining. And like I said, like I told all my fans, I'm gonna and viewers, I'm gonna start to branch out and bring on more co-hosts for this show. So hopefully I'll have you back on again one of these days. As I might do like a Twitter poll to see who my audience wants me to bring on next. But yeah, they're great. I enjoyed the episode.
Thanks,
and have you back on again one of these days.
Don't troll me too hard in the comments, guys.
All right, hey, you can ban them now. You're a mod in there.
Oh, really? Oh, perfect.
Yeah. Yeah, because I have we had over 1,000 viewers the entire time, by the way, and the chat just scrolls so fast that I have like a 5-minute slow mode, and moderators don't have the slow mode restriction. So that's why I have like 20 moderators in there, mostly not to force them to wait 5 minutes to comment, because it's people that I actually like and know.
Oh, nice. So do you do a lot of banning in your chat?
I don't do anything, but the moderators are free to ban whoever they like. I kind of trust them to keep the peace.
Oh, sweet, man. Yeah. I haven't really moderated too much stuff, but it does get nasty when the markets get nasty, or if you make like a couple bad calls, which, traders are not allowed to be wrong on Twitter and YouTube.
Yeah. And that's the thing, right? Like you and I both will never trade using Elliott waves, but if you have your risk management down and you have your rules that you follow, man, if Elliott wave helps you take on confident positions with proper risk management, you'll be a successful trader, even though other traders hate that method.
Yeah, I mean, I have a friend that trades nothing but Gann, which is like astral geometry. He like looks at moon cycles and all that
I'm
stuff.
familiar with it.
But he is a very successful trader. He's incredibly gifted at timing reversals using Fibonacci time cycles and astral geometry and Gann analytics. I took a workshop on Gann. I applied it, but I was never like super successful with it. So, I keep it super simple for myself. It's like, have you ever seen that meme where it's like you go through like horizontal support resistance and then like 12 indicators, and then it always comes back to like horizontal support resistance.
Yeah, yeah, and I'm the same way with Wyckoff. It's just, it has too many moving parts. Like, I don't want to watch something for 6 months to take on a trade, right? Like, it's
Yeah, Wyckoff, that guy was a freaking genius. And so was Elliott. Elliott's really based off of Dow theory, which was based off of Fibonacci. But, so it's everything works as long as you master it, right?
Right.
RSI for me is like the ultimate tool. But it's because I have a level of mastery that most people don't. But there's a lot of like really, really like 300-page guides on RSI. Most people look at it as like overbought, oversold, but there's like 30 other complexities to it.
Oh yeah, absolutely. And that's the thing. And there's like there's almost an infinite number of, TA stuff. And well, maybe not, there's a limited number of TA stuff, but if you combine them, it becomes an infinite range. So you can come up with something that only you trade very, very quickly in the world of TA. And if that helps you be a profitable trader, the best thing you can do is not tell anyone and just trade it.
Yeah. And if you have an edge, the best thing to do is not give away that edge. That's what they say anyway.
That's exactly true. All right, man. Hey, thanks for joining. And time to wrap this up. And guys, I may or may not see you tomorrow. I'm not sure. Usually this show is every day, but it depends. I do have to go to Canada on Monday. And for now, I'm still here in the woods of PA. Jacob, thanks again for joining, and hopefully see you on again.
Appreciate it. Take care, guys.